Raymond Yeung is now joining us on the phone line from ANZ Bank. Raymond, what's the sense that you get? Do you think that the noise regarding the tariff policy or tariff what's happening in China, do you think that is something which can tamper the markets in near term?
I think in terms of the actual economic impact, the list is basically small, but you look at this, the whole list comprises 1,300 products imposed by the U.S. As a target. Of course, that in the end, whether the U.S. actually impose the import tariff on all the products is still pretty uncertain because there are some times for public consultation. But in the end, if we talk about the total numbers or the total values of the goods, it's just $50 billion of imports from China. That is basically a very small amount. Plus the fact that the 25% tariff will not eliminate all the 50 billions of trade. So the actual economic damage is more. But what I'm worried about is the economic relationship between the two countries. If the U.S. targeting the technology transfer to China, that will, in the end, will probably will prevent China from escalating, the technology chain and the ladder, in its structural economic reform.
So also, if you could just tell us that say if, any of this gets to the worst case scenario, will this have a big global growth impact?
At this stage, it's highly uncertain. Simply judging from the list that the U.S. provided last night with this 1,300 products, basically it's very, even though the product list is broad, but the economic damage is very minimal. So I don't expect this will result in a drastic impact or have a negative impact on the global economy massively. But the impact is more long term. The long-term impact is the relationship between the two countries, and so that's will in the end will hurt the global sentiment, and the market reaction will not simply be based on the economic damage of the trade values, but to the development of the relationship of the two countries. So I think the risk actually come from a more long-term deterioration of the economic tie between China and the U.S. rather than the tariffs itself.
Right, Raymond, hi there, afternoon. What exactly is it that you're expecting from China now? The Commerce Ministry has said that they will be soon taking measures of equal intensity and scale against U.S. goods. So do you think that this could, play out into a full-blown face-off between the two countries, given the fact that China has condemned the tariffs quite categorically?
I think China is now having a wait-and-see approach. So far, for example, even with this tariff on steel and aluminium, plus this 50 billion package on some technology-related products, but the Chinese side has so far only launched a retaliation of 128 products with just 3 billion, if not 5 billion, of a very small amount to compare with the U.S. The scale of the U.S. actions. So China seems to be still to believe in the chance to sit down with the U.S. and to address, to resolve the problem and the differences under the WTO framework. So, but of course, that if the U.S. insist to have its action targeting China, then China has no choice, right, to deal with this bilateral relationship on a reciprocal basis, which means that if you have the U.S. is targeting 50 billion, then the Chinese next step for China to retaliate the U.S. measure will be higher than what they did last week. So I expect perhaps, at least China will also come up with a list of products targeting in response to the U.S. action last night.
All right, Raymond, thank you for joining in, giving us your views onto the fears of a trade war escalating, the implications across the globe, and the kind of movement or sound bites that you're expecting as well from China in retaliation to the same.